Andy Tuttle here with the Tuttle Group for this week's market update. Now, we got some good news. We got some bad news. Let's go over the bad news first. We seem to have an October trend developing the last few years. So let's go over it. In 2022, from mid-September to about the end of October, we saw interest rates increase over a full point. Last year, mid-September to October 23rd, 2023, we saw rates spike up over 1.5%, and rates got all the way up to about 8%. Now, this year, we've seen bonds fall about 250 basis points and rates spike up between 0.5 and 0.75%. Here's the good news. 2022 and 2023, they both hit the highs in rates this same week that we're in this year. And within a month, rates had gone back down to their pre-spike levels. And last year, they went all the way up from a high of 8% down to around 6% by the end of the year. So that's a good pattern, right? Will the same pattern happen this year? Well, time will tell. But if we look at the trend for the last couple of years and the reports that are scheduled to come out over the next several weeks, we can at least hold out some hope that that trend may continue. And we'll keep you posted if it does. And we got a light news week this week until the initial jobless claims happens on Thursday. For the next couple of weeks after that are packed with market moving data. And again, we'll be right here to keep you informed about what's going on and how it affects you. Hopefully you've been watching these videos the last several weeks and you have already confirmed that your interest rate is locked in if you are under contract. Whether you're with us, obviously you're locked in and protected, but if you're not, and you're with another lender, make sure that's done, and hopefully you already have. Now, if you're still shopping for a home, there's a silver lining for you too, all right? So here are a few tips to keep top of mind in a market like this. Number one, homes are sitting a little bit longer, and we've seen price reductions around, especially this area, but all over, increase dramatically. So that means sellers are more willing to negotiate. So make the most of it and don't overpay. Also, remember our Inflation Buster program. If you and your realtor negotiate roughly 2% and seller paid costs, you can get a 2% below market rate for the first year and a 1% below market rate the second year. That means that it basically builds a bridge until interest rates drop to their widely expected range of the high 4s to the low 5s by somewhere between into 2025 to mid 2026. It means that you'll be in your current loan for a little bit, don't overpay for the house, and then you'll be able to refinance out of that when it's right. Now, if you are looking to refinance and you feel like, oh man, I just missed my opportunity, well, don't worry, okay? Those opportunities will happen again, but don't miss out next time. So it means you need to schedule some time with us to get your target rate or your strike rate established. You can go to loanwellnesscheck.com to go fill out some basic data if we don't currently service your loan, and then we can establish that strike rate for you. That's where the savings of a new loan make up for the costs in the right amount of time. That's the key to looking at refinance, because these opportunities, they can be fleeting. They can come and go like that. We just had one happen, right? And so after that, it can take weeks or months for rates to go back down to that level. So get ahead of it, plan ahead, and know what that rate is so you can, strike when the iron's hot, right? Regardless of your plans, we're in your corner and we're going to help you every step of the way. I'll say what I've been saying every week now. It's going to be a bumpy ride. The inflation beast is not done with us yet, but don't worry, we're in your corner with a great team and a great strategy. You can win in any market. So good luck out there. Until next time, thanks for watching, and we'll see you soon.